Alright guys, welcome to Go Capital. This is going to be one of the masterclass session that we're going to be having together, and I'm going to be talking about quite a lot of things in this particular class, and I will advise that you watch this video till the end. You pay attention so that you can recognize what you need to recognize and be able to do what you need to do. All right, before we start the class, I want to appeal to you. Please like this video if this look like what you've been looking for. Smash the subscription button and share this video to your friends. Let them begin to see what the wonder there is in trading forex. There is so much simplicity about this thing, and you can actually trade forex without disturbing yourself with so much knowledge. Gone are the days where you need to know all that the gurus know before you make money. It's just one thing that you need, and this one thing that you need is all you need, and you can start making money. All right, let's get to class. Before us here now is a chart. This is the GBP JPY chart, and I'm going to talk about quite a lot of things, but in a short time. Don't worry, it's not going to be too much to bear. You will understand what I'm trying to do. So now we have talked about a strategy which I called the Forex pathway strategy or price pathway strategy. So now the price pathway strategy is not essentially a new thing, but I would say it is new because this is something I put up together from all of the knowledge I've gathered from other people as well. There is nothing that is new upon the face of the earth. Somebody had done this before, and then I simplified it to the way I can use it, and I called it a name that is making me say is my own thing. Do you understand? So the concept is not new, but the explanation is something that is mine. Okay, so I'm trying to get that point straight. All right, without much ado, let's get started. In the master class, we will be talking about trader psychology, market psychology, and this is also going to be part of what I call sentimental analysis. Do you understand? So sentimental analysis is part of the strategy. Do you get me? So, and what am I trying to say? Let me share you my whiteboard. Let me share my whiteboard and write a few things. In the forex market, you will often hear this saying that your strategy is 10 or 20%. Some people will say 20%. Why psychology is 80%. Now what this means is, for you to be a successful forex trader, you need both a strategy and a proper psychology. Okay, come in. Just let me write all of this. So Forex Masterclass, and we'll be looking at Forex Masterclass. We'll be looking at forex market psychology. All right, so we'll be looking at forex market psychology, and We use blue. Okay. So in the forex market, you will be able to trade and make money as a trader if you have this complete set: the strategy and the psychology. These two goes together. You can't succeed one without the other. You have to have a proper strategy that is proven to be successful, and then you also have to have proper mindset, a proper psychology in order for you to be successful. And it is so appalling, or it is so surprising or unfortunate that the psychology takes more of your success. You are going to be successful as a trader if only you have your psychology, your mindset properly aligned. And one of the major things that we'll look at under the psychology is going to be discipline. So let me write under psychology. We'll be looking at discipline. And number two, we're looking at plan. Number three, we're looking at patience. This is actually all that you need in the psychology. While in the strategy, all you need is what we've talked about in the advanced class. I'm still going to talk about it today as well, how you can align the two. Now, discipline speaks of your ability to stay with something, to stay with a plan. Okay? To stay with a plan. Your ability to stay with a plan. Do you get the point? So to be disciplined means to follow procedure. Okay, to be disciplined means to follow laid down rules and regulation. And this is the part that nobody can teach you. Why am I saying this quietly? I'm saying this quietly because it is very important. You need to get this part. Discipline is one of the thing in life that is so essential that nobody can teach you. It is something that is imbibed as you live through life, as you experience life, as you go through life. Discipline is something that cannot be taught cognitively. It is only learned by experience. It is learned by way of events happening to you. As a trader, I will have a lot of things to tell you, things that okay, you are going to see in the forex market, but how you are going to handle them, how you are going to take them actually depends on you. Okay, it depends on you. Nobody can force you to learn discipline. Discipline is not, you cannot put it into somebody. Like, I don't know whether you already get what I'm trying to say. So you learn it by experience. And this is the part where you will find out that I'm using a strategy profitably, is working for me, I'm making money with it, but you are using the same strategy and you are not making money with it. Now you will ask yourself, what is wrong with you? It's actually psychology, your mind, and nobody can teach you that. It's called the first part of that mind that you need to master is ability to let your mind stick with a plan. That is what you call a strategy. So I'm going to put a note here in front. Ability to stick, ability to guide your mind to stick with a plan. Okay, that's what I would define discipline to be. So I would define discipline to be the ability for you to guide your mind to stick with a plan. Now, I am not reading any book, any note why telling you this, because I have experience. So I'm talking to you now from my experience, from my head. I'm not trying to, be super what I use now, like try to sound so big, ambiguous. No, I don't want to be vague. I don't want to be fake. This is real life. I'm telling you that as a trader, the first thing you need to understand after you've known your strategy is the ability to guide your mind to stick with that strategy. Okay, so the plan is another word you can use is a strategy. Your strategy is part of the plan. Okay, your strategy is not all that there is to in the plan. Your strategy is part of your plan. Are you with me now? So this is the first line I need to understand. I will talk more on this as we continue, maybe not in this class, but this should guide you that the reason why you are failing, the reason why you have a good strategy that is working but you are not succeeding with it, is because you don't have the ability to stay with that strategy. And if you have more than one strategy that you are using to trade, I bet you are not going to be successful as someone that is using just one strategy, especially for a beginner. If you want to become a professional trader, you need to have one strategy, one thing that works for you. Okay, just one thing. You don't need more than one. And the ability to stay with that one is what you call discipline. Are you with me now? So without wasting much time, we'll go to the second one, and the second one is plan. Now, under this plan, we're going to be looking at quite a few things. We'll look at your strategy as one of the things we'll look at there. Let me bring it down. I put you in that place. Okay, then the second thing we'll be looking at here under this plan is risk management. So this, I think that's okay. Now, the part of the plan is your strategy, which is your 20% of your overall success. Then the second part is the risk management. The strategy is already known. I've showed it to you. I'm still going to explain more of it today, and it is called the price pathway strategy. I've proven this strategy to work. I cannot show you my Forex account. Okay, you are going to test it with your demo account. If I show you my live account of what I've done with the strategy, there is a possibility of you just going straight to using it in your live account. That is not how to trade. That's not how to test a new strategy. So I'm not going to show you any results. You are going to just take the strategy and you're going to fix it into your demo account. And you're going to start trading it, and you're going to start learning how to use it. I use it in a particular way, which I've been explaining since, and you may find out other ways to use the same thing, but you have to stick with that one thing. Okay, so the strategy is the price pathway strategy. I will explain it as we continue in this video, but let me just go to the second one, which is risk management. Now, under your risk management, we've mentioned that you are going to be risking a certain percentage of your account, And I have said over and over that you risk 1% of your account. There are even some tutors that will advise you to risk just 0.5%. So, but I'm giving you the permission or the leverage to risk 1% of your account. That's your risk. Then, as you are risking that, you'll be looking for a reward, right? You'll be going for a reward. That means your take profit. You're going to be going for a reward. And I said the reward should be 2 or 3%. 2% or 3%. Mind you, the reason is why I'm so confident to say it should be 2 or 3 is because the strategy have the ability to do more than 3%. And I'm still going to do to you, I'm going to explain again how you can use this strategy when I finish this part of the psychology. I'm still talking about psychology because it is important. It's more important than the strategy itself. Okay, I don't know if I will do another video again on the same matter, but I need to tell you that this is important. The risk management is that you risk 1% of your account. What that means, if you have $100 in your trading account, you are going to be entering trades in such a way that your stop loss will be equal to 1% of your account. This is simple mathematics. I don't need to be doing mathematics here for you to understand what I mean. It means you'll be risking $1 for a $100 account. So 1% of $100 is $1. I'm just using that as an example. So meaning you're going to use the kind of lot size and the kind of stop loss that will be equal to $1 whenever you are entering a trade. And what will be your take profit is going to be $2 or $3. Now you think this is small. This is not small. I'm telling you that if you start losing $1 from a $100 account and you keep losing that consistently, that account will finish. The same way, if you keep gaining $2 or $3 consistently, you will discover that you are successful in trading. This is how you should understand risk management. That you don't need to double your account in a day, even though you have seen me done that severally on the group, but that is not what you should be aiming to do right now. I'm able to do that because I've spent 2-3 years learning how to use this strategy, okay? And I mastered it in the last 6 months. This year, I actually started to use the strategy profitably this year. Are you with me now? So I've used many other things before, but I started using it profitably this year. And it took me time to get to where I am. So you can't just begin to say you want to double your account just because you see me do that in the group. No. Okay, what you should be thinking about is how to take $1 to $3, how to risk $1 to get $2 or $3. And if you can do that consistently, you'll be making much. You don't know the importance of $1 right now. $1 is equivalent to 600 naira today, talking to you who are in Nigeria. And 600 naira is big, you just don't know. Until you make 600 naira 10 times before you know that it is big. So now you are making $3. That is 1,800 naira. So if you can do that 2 times in a week, that is 3,600 naira. There are not much people in this country that make up to that in the country every day, in every week. So, and depending on the kind of account you use to start trading, of course, $100 is too small. Let's say you start with a $200 account. 3% of it will be $6. If you make $6 2 times in a week, that's $12. By the calculation, that is over 7,000 naira in a week. In a month, that is more than 28,000 naira. Do you get now? So sometimes you need to start small like that. And when you have done that for a period of 2, 3, 4, 5, 6 months, 1 year, your account would have grown. When you are starting out in the business, you need to be thinking long term. You need to be thinking 5 years, 10 years, okay? Don't be thinking 1 month, 2 months. That's a gambler. That's somebody who is into Ponzi scheme. But when you are planning a business, you are planning your life. Be looking at it long term. 2 years even too short. 5 years, 10 years. Give yourself 5 years. Give yourself 10 years. That's how you plan. Okay. So part of this your plan is to have a risk management that permits you to lose just 1% of your account. Should the case your trade go wrong, your analysis goes wrong, you'll be losing just 1%. Now I'm going to explain the impact of this to you as well. So I don't want to clean this board yet, so I'm just going to grab another text box and draw something here. Okay. Now let's assume you take 10 trades. 10 trades. Let me use a separate color, a different color. So let's assume you take 10 trades. This is an analogy of the risk management now. And in those 10 trades, you lost 5. You made losses 5 times. Are you with me? You lost 5 times. That will be what? Let me write it. 5 losses will be equal to 5% of your account. Then you gain 5 profits. 5 profits. Let's assume you are using 1:2. You now have 5 profits. That's 2%. 2 times 5, that's 10. Are you seeing it now? That's 10%. If it was 1:3 you are using, that will be how many percent? You're getting 3%. That's 15. Okay, that's 15%. Now, out of these 10 trades, for the first scenario, that's scenario 1, we are gaining 2% times 5. That's 10%. But you've lost 5%. If you minus it, you are still in profit. So out of 10 trades, if you lost 5 and you gain 5, you will still be in profit of 5%. Okay. Now, if it was the case of 1:3 you are using, if you lost 5 and you gain 5, you will still be in profit of 10% if you minus the 5 you've lost. That's how risk management works. Now let's assume you lost 6. Let's assume you lost 7 losses. I'm using 7. That's worst case scenario, because this strategy will not allow you to lose up to that, depending on your psychology. Because how I'm using it today is because of how long I've been using it. So you will need time to practice and get to where I am. Okay, so let's assume that you lost 7 and then you gain 3. Now that 3 will be 6%. You just be losing 1% in this. You only gained 3. But what if you are using 1:3 and you gain 3? That would be what? You would have just replied me in your mind. Guess it. You gain 3. That's 9. You understand me? 9%. You still be in profit of 2%. So normally I enter trades of 1:3 a lot, but the very few ones that you see are 1:5, 1:10, 1:11. Those are rare ones, but most cases are 1:3 and 1:2. So 1:3 is more. Okay, so what I'm trying to tell you is, out of 10 trades, out of 10, are you seeing, out of these 10 trades, if you lose 5 and gain 5, you will still be in profit of 5% or 10% using a risk to reward ratio of 1:2 or 1:3. Okay, then let's say for a worst case scenario you lost 7 and gained 3. For this first case of 2%, you'll be losing just 1% at the end of the day. But for the one of 3%, you'll be gaining 2 at the end of the day. So now I'm not advising you. See, okay, let me advise you. Don't take more than at most 3 trades in a week. Yes, some of you are going to learn trading on a smaller time frame, like the 1 minute time frame, the 5 minutes time frame, the 15 minutes time frame. But me, I don't trade any of those. I only trade 4-hour time frame. It's only on a rare occasion I come to the 1 hour time frame. Okay, so because I trade on a 4-hour time frame, I don't have many trades in a week. Sometimes it's just 2, sometimes it's just 3. You can even see that for almost a week now, I have not posted any trade for you guys. Not because there are no trades, but because I don't want to post. But I'm also trying to say that you are not supposed to trade more than 3 times in a whole week. That is where the last thing we're going to be talking about will come in: patience. That's where it will come in: patience. Okay, so that's where patience will come in. Sorry, I'm trying to get this thing again. All right, so this is where patience will come in. Now you'll be looking for the setup patiently, because you know what you are looking for. If I am going to be risking 1% and gaining 2 or 3%, I want to make sure that the 3 times or 2 times I will trade in a week are all profits, all of them. I want to make sure it is so. And if worse come to, like if worse happens, then I'm losing just 1 out of those 2 or 3, so that at the end of the week I will still be in profit. Are you with me now? So that's how you be. That's what patience is. You have to wait to see that whatever you have planned to do or call, like you spot it before you do it. Discipline is different from patience. The patience is the ability to wait for your plan to happen in the market, which your strategy is part of the plan. Are you with me now? So the discipline is to guide your mind to stick with it, to stick with that one thing, to stick with that plan. While the patience is to wait for that plan to come up in the market. There are a lot of things in the market. If you have been taught by several tutors, you would have had 1 or 2, more than 1 strategy by now. But I'm trying to say that use 1. That's discipline. 1, just 1. Then the last thing, patience. Wait for that one thing to happen before you trade. The ability to wait on your plan. That's what patience is. The ability to wait on your plan. That's what it is. So you need to wait until that thing you have discovered is working for you to occur in the market. If not, you are going to have this scenario of losing 7 and gaining only 3. But if you want to have, okay, let me show you another scenario now. A scenario of gaining. Let me remove this thing from here. I don't know if you can see. Okay. So let me give you a scenario of gaining. You have only 3 losses out of 10. 3 losses. I hope this my spelling of loss is correct. You'll be losing just 3% at the end of the day. Then you now have 7 profits. 7 profits. What's going to be that? It's going to be 14% or 21%. If you minus 3 from 14 or from 21, you'll be gaining 11 or 18% at the end of the week. So, but this is when you take 10 trades in a week. You are not supposed to. In fact, in a whole month, you're not supposed to take up to 10 trades in a whole month. You're not supposed to. because the strategy works. So you have to wait for it to form, and you just stick with it. You just go for it without fear. So if you do not do any of these three things that I just mentioned now I can wipe this board now. Okay, let me just write it here. If you do not do any of these three things, discipline, plan, and patience, if you do not do any of this, let me tell you what will happen to you. From experience, what will happen to you, number one, is fear. Fear. You'll be afraid of trading. In fact, you will quit. You want to give up. You don't want to even trade again. You'll be like, this thing that they are talking about does not work. It's a scam. Fear. Are you getting me? Fear. That is what is going to happen to you. The result of what is going to happen at the end of the day is fear. And once you already have this thing called fear inside you, there's no way you will make profit. The next thing that will follow is loss. You will keep making losses. Every time you enter the market, you keep making losses. Are you with me now? So you need to stick with this thing I just mentioned. So if you have fear already, that means you don't have confidence in the strategy again, and ultimately you may quit trading. You may not have confidence in Forex. You may just start making losses and you blow your account. Are you getting me? So you don't have to be afraid of trading. You don't have to keep losing. And for you to avoid these two, you have to make sure you are in this category: discipline, plan, and patience. So that's all there is to say at this moment about the Forex market psychology. I am going to go to the charts now and show you the part of the price pathway strategy very shortly. I'm not going to take so much time in that. All right, so now let's go to the chart properly. Are you seeing that this was an uptrend? Yes, it was an uptrend. Let me show to you that this was an uptrend from this particular point. All right, let me just make it simpler by saying, let me start from here. Market started selling from this part, went up, came down again, and it got to a high. I told you that whenever market gets to a place where it wants paused, it will pause again when it gets there. So when it got here, it paused as if it wants to buy. So by the strategy, you are supposed to enter a buy here, but this one failed. You lost here, and it went down, started creating lows, lower lows. This is the structure of a downtrend. So what you're supposed to wait for is for market to go back up again to test a place that it has created a lower low. So, and it got to this one, it broke it up, they started coming down. This is where you know that, oh yeah, the downtrend has begun. Okay, so you are not going to be in this trade until this part. So this is where you are going to sell. Now, how do I explain that? How do I want to move? I don't want this thing to be showing. Oh God. All right, so this is the part that is very important. Sorry. This is the part that's very important. Market is going back up. This is the part where you would have entered a sell, but it failed. All this while you will not be in a trade. You just be patient, you just be waiting. Remember, you are looking at many assets, not just one, so you will see other structure in other places to trade. So market came back, and when it got here, it broke it before selling, so it failed. So you would have lost only one trade from here to this part, because you will not be selling at this time. You wait for the sale to be established. So now market broke this particular low and this particular high here upwards. Then that should signal to you that a structure have been invalidated, a structure have been broken. So you wait, market will now come down. So this is where market is going to come back to, because when it was going up, it moved from here to here, from here to here, from here. So just as when market created this high, it came back to this high before buying again. That's that, to come back to this high before buying again. So you see that all of this would have been the block. I told you before that you use bearish engulfing, bullish engulfing to know the block. Okay, so I've told you about the block before, how to know the block. It's in the previous videos, you can go and watch that. So this is the bearish engulfing that was here. So all of this will be the area your stop loss is going to be. So you will put your entry, your buy limit here, and you're going to put your stop loss here. So and you will measure it to know the size of your account. This is 185 pips. So you measure this to know the kind of loss size you'll be using relative to the 1% of your account. Okay, so then your TP is going to be 1 that is times 2 times 2 times 2 would mean, since it is 185 pips we are risking, it will be 370 pips for 1:2. So this will be 1:2. Then it went as high as this, which is over 1:3. Okay, so that's how to treat the strategy. How do you know that the trend has changed or is about to go on a different pathway? Is when it breaks a high. It broke a high here, and then you know that, oh, an uptrend is about to begin. For a downtrend, it's going to break a low. So now let's see this. Market has been going up, going up, going up, going up. Then it started coming down like this massively. Then you will not just admit or assume that the downtrend has begun. You wait for it to be established. So it came back up to this point and it came down again. Then you know something is happening, because this is a high that is lower than this one. You know, let me draw it for you. This high is lower than this. There you know, oh, something is going on. The market is about to change trend. Okay, so started coming down, went up again, couldn't break this high, came down, broke a point here. There you know that it's time for you to start looking for a sell setup around this place. So you now mark here, you mark this block. Okay, you mark that block, and what happened? The market sold. Let's assume you could not get this because you were still waiting. Then it broke this high, that is this low that is here. What you are supposed to be looking at is this one, this particular point. This is what you'll be looking at for a sell. A market came back to it and sold. Are you seeing it? So this is what I'll be telling you about. It is called a mitigation block. When market break a particular low, look at this particular price pattern that was formed in that place on that low, the recent low, not this one, the recent low relative to this move. That is where the market will come back to, and then it will go down again. Are you getting me now? So let me show you another asset to prove this to you, that it's not just this case, it's not just one scenario. So in fact, this one, it was mush. Now look at this. A downtrend was established when a high was created here that was lower than this one. So you know a downtrend is about to begin. Then it broke a low here. Daily price broke this low here. What happened? It came back to it. Okay, so it came back to this low that it was just broke, that it broke. So you can even mark this one. This was the low. Came back to it and it did what? Started selling. So it broke this low again. Merely it broke that low, you are going to mark that one again. You're going to mark this one that it broke. You're going to mark it. Since there is no clear price action here, you go to the 1 hour time frame to know what has happened. Okay, so let's go to the 1 hour time frame. That's the occasion, the cases, the rare occasions where I look at the 1 hour time frame. This still is taking time to load. Don't know why. All right, so it broke this low. This is the low it broke. Are you seeing it? So this is the price pattern that formed here. This tweezer bottom. Are you seeing it now? So immediately the price broke it and came back into it, started selling again. So that's how the market moves. That's how it moves. When it breaks a low, it will come back to the low and before it starts selling. So let me show you another example. Let me use this one to show to you. This one has many. I didn't even know I've drawn so many down. Okay, now market created low that are equal here. you know something is about to happen. This is a low, this is a low, so the market is trying to change. That's what you will know. Then it broke a high here. This 4-hour time frame, mind you. So it broke a high here and went up and came to this one and sold back to this one here and bought. Broke this one and came down to it and bought again. Broke this one, came back to it and bought again. Are you seeing it? So that's the way market moves. Market will break a high and come back to the high it just broke before buying again, and then it can break a low downwards and come back to that low it just broke before selling again. So that is how you look at this strategy. I hope you understand it now. So even this scenario is the same thing. Market was coming down, coming down, coming down. This is a downtrend. You will know that this is a downtrend. It's very obvious for you. You don't need to scrabble your head to know what's a downtrend or an uptrend. You will know. It's very obvious. If you are not seeing the trend clearly, then don't even think of it. In our next class, I'll talk about the 3 W's of the market, okay? Not in this class. So now, market will started coming down and broke a low here. What happened? It went back into it before selling. And when it was selling, it broke the low it created here. What happened? It came back to it again before selling. Are you with me? So sold here. You would have still got more than what you should trade in this move. And then this particular one also came back to this. There are 2 point market can come back to. I told you before, it can be this one, it can be this one, but this is the first one you place your trade. If that one fail, wait for market to come back to the second one. If it doesn't, wait for a new setup or go to a new asset. That's how to be patient with your setups. Okay, so with this we'll come to the end of this class. I'm going to talk about the 3 W's of the market in our next video. 3 W's of the forex market. All right, please, if you like this video, subscribe to this channel, like it, share, and let it go viral for those who are struggling to see the simplicity of the forex market. See you next class.